Jon Najarian here with Brock Pierce, the one and only. He just keynoted here in Hong Kong, did a fabulous job describing crypto and all the opportunities there are, not just crypto, but anything related to that. Man, you're crushing it, Brock. Can't wait to have you on the show.
Well, I had to follow you, so yeah, let's do that.
Yep, we'll do it, folks. Bang! Bang! Folks, in case you have not been a subscriber to 3 at 3, shame on you if you haven't. But the gentleman on the screen with me right over there is Justin Nugent. And on Fridays, or if I'm not able to do it, Justin has been doing a fabulous job for Market Rebellion, reporting about 3 at 3 and other stuff where he writes up what has been transpiring in various chats and things like that. He's a valued member of the team, and I'd say welcome him, but he won't hear it. So I can say welcome, Justin, and I welcome you. Mark and Pete were both unavailable today, so it's great to have you here, Justin.
Jon, thank you so much. I'm happy to be here. Happy to talk about all the stuff we're about to hit.
Fantastic. Well, without further ado, folks, we'll dive right into the macro minute. So as you know, Justin, the macro minute, it's about that long, 1 minute. And I'll quickly say that my side of the macro minute is all about mortgages and how applications fell by 5.7% last week. That was the biggest drop since February. And obviously, there are a whole bunch of issues with the Fed now sounding more hawkish. And I know you were talking about that. I think the market's going to be talking about it a lot too, quite frankly, Justin.
Yeah, Kashkari is coming out again and again and saying, hey, we might hike. We might hike, guys.
We might.
And yeah, and whether you believe him or not, it looks like the ECB might be about to cut. So that's a pretty interesting divergence if we do get it. And I think my side of the macro minute is just how related each individual news break has been to what the smart money has been doing. Jon just talked about mortgage applications. Guess what? About 2 weeks ago, we identified SLG puts and ITB puts. That was Jon. Those were at the 55 strike and an ITB at the 108 strike. Both of them are getting crushed. The ITB is down 4% this week. The SLG is down 10% since he identified them. So I think just broadly speaking, the macro is the smart money. Whatever the smart money is doing, they're calling the shots here.
Yep, I agree. And I wouldn't be surprised if they bought a bunch of puts yesterday on NVIDIA as well, as it spiked to a new high. Now let's dive into fantastic futures. Because for futures today, I'm going to talk about gold. And I'm going to say, you know what? Yeah, they're influenced by the stronger dollar. Justin just described why the dollar might be higher. Because if Europe cuts interest rates and the United States is raising or holding interest rates at a high level, that means people that have free cash would likely switch from the euro to the dollar, from the Hong Kong dollar to the dollar. Why? Because we're paying a higher interest on that money. So why wouldn't you want to be in dollars versus the other that are reducing the interest that they'll give you if you're somebody with free cash?
Yeah, exactly. Couldn't have said it better myself. Also, some of these commodities are really, really popping off. Some things that people might not be looking at, orange juice, up 14 of the last 15 days from like 370 to 487, just squeezing to all-time highs. Coffee looks like it's ready to make a run for the all-time high as well. And a lot of other things, within the precious metals, copper, everything's just doing very, very well in spots that a lot of traders aren't looking.
Which means, folks, inflation. because everything Justin just talked about, that's adding to inflation. It's not taking it down. And if inflation is moving up, well, that means the Fed can't really cut. All right, folks. Now we're going to dive into one of the biggest news stories of the day because it's a $22.5 billion deal. ConocoPhillips jumping in to buy Marathon. And this is a deal that makes a lot of sense, I think, because they're picking up a valuable asset. Marathon has been in the news a lot for how successful they've been, and they're a shale play. So if you're somebody that wanted to diversify and sort of shop around for another energy producer, I think that's the name of the game, and I think that's what they just did, Justin.
Yeah, exactly. And I think price action is exactly what we would expect to see. Conoco says we're going to buy MRO. Conoco goes down. The person getting acquired goes up. I think it makes perfect sense. And it's one of several acquisitions that we've been seeing in this space lately.
Yeah. It is, as Mark Lopresti has told you guys time and time again, something that he had predicted back in November, December timeframe, where he was saying, you know what? I think we're going to get a lot of deals, M&A, mergers and acquisitions in the energy space. And sure enough, that's exactly what we're getting. And this one, I looked to see, Justin, if we had unusual activity in this. We did, but we didn't make money on this one because a lot of the calls they were buying in Marathon had expired already or were still above the market because the stock had been so soft. And again, I think Conoco's getting a deal because they got the stock on the pretty cheap side rather than chasing a hot stock. They're picking up a stock that was kind of fading, but still has a lot of great assets. All right, now we get into one of them, Justin, that I think both you and I have talked about on 3 at 3, which is American Airlines. Now, I wish this was bullish, but it's not. And what happened was we had unusual activity in American Airlines, or AAL, puts. Now, when we have unusual activity in puts, folks, that's both hands out. People are betting that the stock is going lower. Well, they were right. And that graph that Jared just shows you proved it. That graph showed it kind of falling off a cliff and a 15% drop. Yeah, that's nice if you've got 1,000 shares short in stock. You made $2,000. Congratulations. That's great. And I mean it. It is great. But you made a lot more money than that on the options. And you defined your risk on entry with the options, which is what Justin, myself, Mark, Pete, our whole team, that's what we're all about. Defining your risk and then getting a leveraged return. And boy, is this one a leveraged return.
Yeah, exactly. And what's shocking to me is just how spot on smart money has been with these like divergent moves in the airlines. A month ago, we saw a ton of bullish activity in United Airlines, 10,000 contracts, 9,000 contracts, 10,000 contracts. What do you know? They popped from the low 40s to the high 50s. At the same time, as we see UAL, we see bearish activity in JetBlue. What do you know? They dropped from the mid 7s down into the 5s. And now we've got American Airlines. And this isn't even the only bearish activity that we've seen. Back on April 5th, we saw the 11 strike puts going back when they were a high $13 stock. And now those are in play, and those are all the way out in August. So those are still very active. Whether we're looking at the airlines or NVIDIA or Vistra or First Solar, the smart money, yet again, it's just been even more on point than usual.
Yeah, and my gosh, we were saying before the show, folks, that it's almost like they don't even care anymore. They're not even trying to hide it. When they're buying these, and they bought a ton of puts today in American Airlines. After it fell, they were buying a ton of puts at the 10 strike. I think some people are afraid maybe that there's more bad news pending for American Airlines, because they were buying, when I say a ton, I mean over 5 million share equivalent, maybe even 6 million share equivalent of puts. So that's another bet that it keeps going lower, folks. Well, Justin, let's take a look at another. Let's take a look at Abercrombie and Fitch. You're a fashion maven. He's wearing a Steve Jobs black turtleneck today, folks. Or is that a t-shirt? I can't tell.
No, it's a turtleneck. It's a turtleneck.
So he's got the Steve Jobs. He's rocking the Steve Jobs. Abercrombie and Fitch. This is one of many places that the consumer is still spending. Now, they've cut way back in restaurants. We know that because they're closing a bunch of restaurants. But Abercrombie and Fitch, retailer, jeans, shirts, they have been beating, and now they said they expect the growth to continue. We were looking for somewhere between 4 and 6% growth in sales. Now they're saying it's going to be more like 10. That's almost double, of course, depending which end of that 4 to 6% you choose to look at. But it's almost double what the street was looking for, Justin. So I guess justified why it's doing so well today.
Yeah, and something that's really interesting about Abercrombie and Fitch is that over the past several quarters, they've actually become cheaper to own, even though they're up 350% in the last 12 months from a 127 PE as they continue to report great earnings down to a 30 and some change PE. And one more thing that's really interesting, though, is that as A&F continues to rally, insiders are selling shares of this stock. They've sold about 26 million since March 8th, it looks like, several different insiders. So we'll see if that ends up just being some, money for a new yacht, or if maybe they know something that we don't know.
Yeah, well, and after 6 straight quarters, like we were saying in the previous stock, when you get a company that's on a roll, a lot of times those insiders do want to take some profits, even though it is on a roll, because they worried, okay, the bar is higher and higher and higher as we continue to beat and outperform. So maybe that makes some sense too. Let's now talk about Chewy. One of the reasons Pete's not here is probably he's messing around with his dog somewhere. And Chewy delivers all kinds of things for your pets, folks. And they have, I actually subscribe to Chewy with our dog. And the reason that graph that you see on the screen looks so good is that their Autoship, which is basically you put in and you say, yep, my dog eats the same food every day, every month, so I need you to auto ship me a bag, otherwise the dog's going to go hungry. Well, that Autoship is growing and growing in popularity, and that's reoccurring revenue rather than a one-off, somebody buying a chew toy or something. Especially with Autoship, they're probably in cat food, dog food, whatever. And that's why this stock's performing today, right, Justin?
Yeah, exactly. Subscriptions are the name of the game. And I just think it's so funny how you can look at other stocks in a similar sector and they'll tell you what a lot of these other stocks are going to do. You can look at Woof, Petco. They're up 102% in the last month from like $1.50 up as high as 360 or something like that. These are interesting situations where maybe you could have looked at that and said, hey, maybe Chewy, a very high beta name, is going to come in and they're going to crush as well.
Yeah. Well, apparently they did, and everybody seems pretty pleased. All the Chewy folks, a quarter ago, it was expected that they would post earnings of 10 cents a share. They actually came up with 18 cents a share, folks. So that was a surprise of 80%. They didn't surprise by 80% today, but they did beat by almost 50% more than the street was looking for. So yeah, just like Justin said, this is one of those stocks that people have been betting on, and betting on Woof, Petco, and I think if they need to tighten their belt, this is sometimes the last place people do, because they love their pets. They might have to tighten their belt by not going out to Marie Callender's, which is why they're closing so many stores, or Fuddruckers, which is why they're closing so many stores. But do they avoid buying something for their pet? It's one of the last things they avoid, I think. All right, let's hit sports. Pete loves this segment. I do too, but Pete's much more of an expert on sports than I am. The NHL draft special is what we're calling this one, Justin, because we've got the San Jose Sharks, and I can remember when they were the top team in the NHL. Well, they're getting the number one slot in the lottery, so chances are they're not having a bang-up season, because usually for most of these leagues, the way it works is, and it's worked fairly successfully for all of them, if you really stink it up, they'll try to get you a great player. It's up to you to pick them, but they'll try to get you a great player to maybe smooth out that rocky slide of a bad year. And in this case, the Sharks have the number one pick, but I think, Justin, you know who has the number two pick.
Yeah, it's the Blackhawks. Chicago had to settle for number 2, but landing Connor Bedard is still a massive win. This generational talent could be a cornerstone of the Blackhawks' next dynasty. He's probably the most hyped prospect since McDavid. He's got a lot of scoring ability. He's got great puck possession, and he's probably going to have an immediate impact in the Windy City.
Yeah. If they can get somebody, obviously the Blackhawks have a number of very good players around Bedard, but the fact that the kid is I don't think he's old enough to drink. I think he's under 21. So I'm not trying to rat you out. I'm just trying to let you know that he's a young guy, and that's fabulous. Like Justin said, fabulous, because he could be one of those guys, cornerstone. He could be, that young talent that's sort of like Luka Doncic over for the Mavs, who's only 5 years in the league. 4 of those 5 years, I think he's been an all-star. And Bedard is in that same, cut from the same cloth. So that's pretty cool. All right. Now, to wind it up, let's talk about the Rangers and the Panthers. Florida Panthers, I don't know what it is, but Vinny Viola, he owns Virtu, Justin. And, well, he doesn't own all of it. It's a publicly traded company, but he started it. And he's a brilliant guy, and he's a friend of Pete's and mine. And he has done a fabulous job putting that team together down there with the Florida Panthers. Both those Florida teams are excellent. The Tampa Bay team that Pete favors, of course, since he's closer to it, is Jeffrey Vinnick, the former money manager at Fidelity. He owns that team. And our other friend, like I said, Vinny Viola of Virtu, owns the Florida Panthers. And guess what? They're beating one of the best teams in the NHL, the Rangers. So do you think they've got a shot at the Cup now again?
Yeah, I think so. Absolutely. That's a big beat. So that's obviously they're going to come in strong now.
Yeah, I think, and with their big enforcer, Rempe, the big enforcer that the Rangers have had, he's been somebody who's helped fill up Madison Square Garden. So I've got to believe, Justin, that they might have one of the biggest live gates in all of the NHL, because people in New York do love their hockey. So they do so with the Islanders as well as the Devils. All 3 of those teams are in pretty close proximity. And I think a lot of people that had been waiting for years to see a great Rangers team, like when they had Messier and won the Cup, I think they thought that was going to happen again this year. But with that generational talent, that guy Rempe, who's 6'7" and 240 pounds, I think the Rangers are going to be in the same kind of position that we hope the Blackhawks are in, and that is get a great young player, let him play for a decade or more, hopefully without injury, and you can just build the team around him. So that's what we're crossing our fingers on for the Rangers, folks, and for the Blackhawks. Well, Justin, thank you for joining us. It's a pleasure to have you. Again, folks, Justin Nugent. He sits in for me on Fridays on 3 at 3. And he also does a lot of other great stuff for Market Rebellion. We appreciate you joining us, Justin. And folks, remember, we'll be back tomorrow at 1 p.m. Eastern Time with more Rebels Edge. We'll see you then.